So Formula 2, long-term EMAs. So long-term EMAs help us spot a trend immediately. It avoids the death of trading against the trend because no matter how good you are, trading against the trend will make you lose a lot of money. And it helps you to see the buy zone for smart money. So I know a lot of big dogs uses long-term EMAs just because they're reliable and it can be potential support. But our goal is to use long-term EMAs to see the trend. So notice I use long-term EMAs. I don't use short-term EMAs because that's not what we're trying to do. So again, train your intuition. What do you see? And answer is you see an uptrend. You can see that the red one is above the blue one. Those two lines, I'll explain what they are later on. But then you see the price, the candlestick chart is clearly above these two lines. Again, you see that the red one is above the blue one, and you see that the price is clearly above these two lines. If you buy during these times, the chance of you winning is really high because time is in your favor. Let's go for another example. Again, you see that price is clearly above the red line and the blue line, and if you buy during any of this period, more often than not, you will make money. So what is EMA? So EMA is just a moving of price, an average of price based on a period of time. Whether that is 100 weeks or 100 days, doesn't matter, but it's just based on time. In our case, we're looking at the last 100 weeks. So notice I'm using a weekly chart. And the last 200 weeks. So we're looking at the very long term because we want to see the long-term trend. So for the red one, it's actually a 100-week EMA, and the blue one is actually a 200-week EMA. So the purpose of the EMA is to identify a healthy uptrend quickly. So we want it to be very efficient because right now we're just doing our preliminary analysis. We'll go into in-depth analysis later on, like fundamental analysis, assessing what is the worth of the company, looking at the insider trading activity, but the purpose of the EMA and technical analysis and Bollinger Band is allowing us to spot a market bottom in an uptrend quickly. So let's set up the EMAs. So going back to this Microsoft chart, indicator, whoops, okay, moving average. So I favorited one of my moving average, the exponential moving average. So add a 2 in there, so I clicked it twice. And as you can see is on the upper left hand corner, click the little gear icon, settings, and change the red one to 100. Okay, good. So then now I click on the second gear icon and change that to 200. And under style, I'm going to make this blue. Okay, so now we have all the indicators on a chart. And as you can see, this is obviously an uptrend. This is a weekly chart, so Microsoft is good buy. And you can see that, the Bollinger Band previously identified these as a bottom. And you can see that it kind of matches with the red line. So when it touches the red line, it is also a good indicator that it should be a buy. So you can see that when it is really far away from the red line, you shouldn't be buying. But of course, this is more advanced level. But if you can just follow the rule of buying near the red line and buying at the bottom of the Bollinger Band in a clear uptrend, you will be making a lot of money. All right, moving on. So now we're going to go through some examples. Putting it together first. So before we go through examples, let's talk about the sweet spot. So price can be above and below EMA. So that's the two columns here. And the price can be, and the Bollinger Band can be flat, expanding, or contract. So you want to buy when the price is above 100 and 200 EMA, showing a clear trend, and the Bollinger Band is flat, preferably the second bottom you see. So this is where you make the most money. If the price is below EMA, so that means it's a downtrend, and the Bollinger Band is expanding and is touching the bottom, then you should not buy at all. You should not buy. You should avoid this at all costs because the trend is clearly down and the Bollinger Band is expanding, so there's some sort of fundamental movement downward. So just because something is cheap doesn't mean you should buy. Just like shopping, you want to buy good quality stuff at a low price, but you don't want to buy a bad t-shirt that will break after 2 washes. Same idea here. And I just plotted what is the most profitable point. So if you can just focus all your energy on buying stocks that's above EMA and 200, and when the Bollinger Band is flat and the price touches the bottom of the Bollinger Band, that's where you make the most money. You don't need to make a lot of trades. Just 1 to 2 a year would be more than enough. Okay, Microsoft, 4 buying opportunities. So now this is the previous chart. I realize I identified it there, but erase that and assume I didn't tell you where do you think the buying opportunities in this chart is. So 3, 2, 1. The first one would be right here. And as you can see, they actually formed a double bottom because you see that the Bollinger Band is expanding a little. So I wouldn't enter the first time because a sudden drop in price this much and the Bollinger Band is expanding might indicate that the trend is actually going down. But because of the Bollinger Band, I know the trend is up, so I would wait. So when it makes the second bottom, which touches the red EMA, then I know it would be a good buy. Of course, the market is very nice and gives you another buying opportunity several months later, near September. And you can see that there are actually 4 to 5 candles at the bottom. And each one of those candles is 1 week. That means you have 4 to 5 weeks to enter into Microsoft. Like that is the window of opportunity before it shots up by however many percent. So the next buying opportunity is there where the BB bands are contracting and then you can see that the price is getting really close to the bottom Bollinger Band in an uptrend. Of course, you know what I said about contracting Bollinger Bands is that there's going to be a second bottom. So bam, second bottom shortly after that. And look at how many candles there are. 1, 2, 3, 4, 5, 6, 7, 8, 9. It's around 10 candles. That means this buying opportunity has a time frame of 10 weeks. That means if you just happen to scan through Microsoft within this 10 weeks time frame, you can take advantage of this opportunity. So now you have acquired your new superpower. In just these 3 videos, you can instantly spot a trend. You can see a bottom. And these are all no-brainer techniques that help you visualize the price in front of you so that it reduces the amount of thinking, because you want to save your thinking for the things that are really important. So what can you do now? You can spot a trend, use EMA. Can you spot a market bottom? Use Bollinger Band. Can you spot a dip in an uptrend? Yes, use EMA and Bollinger Band together. Congratulations! You have mastered technical analysis. That's all technical analysis is about. Volatility and trend. And I have used 2 indicators. We don't need to use a lot of indicators to identify these 2. And by using volatility and trend, you identify a buying point, which subsequently can be a selling point when the price reaches like a high point in the Bollinger Band. So what's the next step? Every day I look at the chart once. 5 minutes or less, scan through, and just use Bollinger Band and EMA. And once I identify a good buying opportunity, then I do some research on it. Because now, more questions pop up. How do you know if the company you're investing is truly a good company? This is not something that technical analysis can answer. For years, I've been struggling with using technical analysis like Bollinger Bands, EMAs, so Haystack, MACD, or whatnot to answer questions that technical analysis cannot answer. So how do you know if the company you're investing is a good company? You need to use fundamental analysis to answer that question. How do you know how much your company is worth? The true value. Again, fundamental analysis, which is something I teach later. This is important because you can't just use an EMA, look at the average price over the last however many days, and go like, that is the true value of the company. The true value of the company is forward-looking. You need to look into the future, or what the company can potentially do to determine the true value. Again, that goes back to fundamental analysis. How can you tell if the executive in the company is supporting or going against the company? So what do you mean by supporting? For example, if management is buying, that's a good sign. And if the management is selling and you are buying, then you got to think twice. So in order to answer that question, you need to look at insider activity. How do you know what kind of instrument is best to maximize your return? Now, this can only be answered if you understand financial instruments. So when I talk about financial instruments, it's about bonds or stocks or stock options or GICs. Imagine the stock market is making 8% a year and you're just buying a GIC that pays 0.5%. You might be investing in the market. You might be investing, but using the wrong instrument, you're missing out on the remaining 7.5%, even if you just go ahead and buy index funds. And finally, how do you know how much to invest to maximize your return? So Warren Buffett has a famous saying. In fact, it's one of my favorite quotes of all time, is that imagine you have a punch card. And for those who don't know what a punch card is, just imagine you have 20 boxes. So each time you invest in a company, you punch a hole or you check the box. And for your entire life, you can only invest in 20 companies. And that's all you need to maximize your return. So instead of trying to invest in 100 companies in one sector like mining or banking, you just need a handful of really good companies. And that will maximize your return. And this can only be answered by portfolio management. So, as you know, I'm a full-time professional, so I haven't gotten the time to make all the videos yet. And this is where I'm at right now. So, as you progress through the course, you'll learn more about all the remaining topics and all the unanswered questions. And I'll share my entire trading strategy with you. So keep going, because you're going to get a few more superpowers. So, you're done Bollinger Band, Formula 1, you're done EMA, and now you can move on to fundamental analysis.